One small bracket shift in 2026 could change your tax bill fast. Honestly, here is the problem. Most people still think brackets tax all income. I think that mistake keeps costing workers more than they expect every spring. Because the United States tax code taxes layers, not your whole paycheck at once. That means the first dollars sit in the 10% band, then the next slice climbs. For 2026, the top federal rate still stays at 37%. But that top rate starts only above $640,600. For joint filers, that top line reaches $768,700. Hold that number because in a minute I will show why the standard deduction matters more. Single filers get a $16,100 standard deduction in 2026. For married couples filing jointly, it rises to $32,200. And for heads of household, it rises to $24,150. That matters because a bigger deduction can shrink the income that gets taxed. Here's the part people miss: taxable income is not the same as gross pay. You subtract deductions first, and only then do the brackets start to bite. So when someone says they got pushed into a higher bracket, that is only half true. Only the dollars above each cutoff move into the next rate, not every dollar earned. The IRS lists 10%, 12%, and 22% in the middle tiers. Then come 24%, 32%, and 37%. And honestly, that structure is why a raise does not always feel like a tax trap. Think about a worker near the 22% line. The extra dollars above it move up. The 22% line starts above $50,400 in 2026. For married couples filing jointly, it starts above $100,800. That gap is why filing status can matter almost as much as income itself. Keep the next number in mind because it explains why paychecks still feel tight. Let me pause there because the next number changes the whole way people plan. For joint filers, it starts above $512,450. For joint filers, it starts above $512,450. 32% starts above $201,775. That ladder is built to catch more income only as your earnings rise further. The IRS also says the basic rates apply to tax returns filed in 2027. So the brackets you hear now are really about money earned during 2026. That timing trips people up every year, and I think it creates most filing confusion. If you only remember one thing, remember this: brackets tell you where money is taxed. They do not tell you your entire tax bill, and that difference is huge. The standard deduction for married couples is large enough to change the picture. The single filer deduction at $16,100 is not small either. And for many workers, that deduction is the quiet reason their bill drops. Another useful clue: the IRS says the top rate still remains 37%. So there is no surprise new top bracket jump in this update, just a new cutoff. What changed is the threshold, and threshold changes are where real planning lives. That is why high earners watch inflation adjustments so closely each year. Even middle-income households should care because every cutoff nudges take-home pay. If your income sits near a line, a small raise can move only part of your pay. Even middle-income households should care because every cutoff nudges take-home pay. Honestly, the tax system looks scary until you split it into tiny layers. And the math says this: small bracket moves can quietly shape a whole year. So keep an eye on your filing status, your deduction, and the cutoffs. Like and subscribe, stay tuned because the next tax layer